Focus. Ideate. Innovate. Enable.
Hello and welcome to another episode of NSE FinWiz, powered by CNBC TV 18 Season 3. Today we're at the Gurgaon office of India's leading online financial services platform, PolicyBazaar.com. PolicyBazaar.com is India's largest insurance website and comparison portal. Established in 2008, the portal has come to be known as the gateway to online insurance in India. NSE FinWiz visited the office of PolicyBazaar.com in Delhi with the country's finest experts to advise and educate the young employees on investments and financial planning. And we're now joined by our two very special experts. We have Tanveer Alam, who's the founder and CEO at FinCart. Welcome to the show, Tanveer.
Thanks, Amit.
And we have Ankur Kapoor, who's the founder at Ankur Kapoor Advisory. Welcome to the show, Ankur.
Thank you.
And our core topic for today is the fundamentals of personal finance. Ankur, fundamentals of personal finance. Yes, very important to set the base and then build on it. But what's like the first step for someone who's not been doing it who's been doing it in a haphazard way? What's the first baby step to start so that you can do it properly?
Well, there are two things you should do to begin with. The first thing, you should take stock of your income and expense, well, on a monthly basis or on annual basis. And the second thing you need to do is probably write down each and every component of your investments that you have. And then comes the planning set for what you want to save. But these are the first two things you need to start with.
Okay, so do your budgeting, which is really important. Tanveer, when you come to the planning stage, which is setting your goals, again, it's tough. It's easy to say, write down your goals, but when you take that pen, you pick up that paper, or you sit on your laptop and you start writing it down, it's really difficult. And the biggest concern is that I don't know what I want 5 years from now. I don't know what my life will be 10 years from now. What's your advice to them? Because it's important to set goals, but how do you set correct goals?
Okay, look at your life's milestone that you have, and that's very easy thumb rule to set up goals. But before we get into that, planning, if you look at when you want to plan a holiday, how many of you plan 3-4 months well in advance? Can you raise your hand? Many of you? Your biggest holiday is perhaps your retirement. How many of you have started planning for that? Perhaps not. See, what happened behaviorally, we have seen, is that we tend to plan for things which we know, we are aware of. Anything that you don't or not completely aware of, or you lack knowledge, or if you have a limited knowledge on that space, you tend to procrastinate. But in today's time, investment is no longer a choice, it's a necessity. Okay? And given the lifestyle change that is happening, planning is very, very important. Okay? So first thing that you need to do is educate yourself. Two is, if you're not married, your marriage will be a goal. Once you get married, children education, your own retirement, buying a house, buying a vehicle, yearly vacations, these are goals that you have, right? So if you have those milestones set up for your own self, you can plan those goals and plan your investment accordingly.
Okay. Ankur, when you set the goals, the second step is what we say diversification and asset allocation, those jargon heavy words. Simplify that. What does that mean? And again, why is it important?
Sure. Well, as Tanveer said, the first thing you need to do is basically understand your goals, and I probably add a little one point more on that when you talk about goals, segregate them into two aspects. One is your core requirement, the other would be your aspirational requirement. The core requirement would be your basic things like planning for retirement, planning for child's future, and so on. Aspirational would be, buying a very expensive car or a second home, and so on and so forth. The first aspect of core portfolio you need to fulfill. And from that point of view, diversification is important. A goal which is 3 years from now and a goal which is 15 years from now will have a different allocation of funds. If you are investing for a short period, let's say for less than 3 years, then you should not really take exposure of equity. You should basically invest into bonds, the debt side of investment. And in case you're investing for a goal which is say beyond 10 years, then having a equity exposure, more of equity exposure is essential so that your money can grow beyond inflation. So that is what you need to do from a diversification point of view.
Tanvi, this question is from Ruchi Shukla. She says, I know it's good to start early, but how much of my savings should I start investing?
Okay, ideally, very simple thumb rule is you should at least have at least 25% of your net earning as being putting for longer use saving. That should be minimum that you should be putting it.
Okay. Ankur, this question is from Sumit Narula. He says, I have multiple credit cards and I want to close one with lesser credit limit. Will it affect my credit score adversely? If yes, then how?
Well, credit score is actually impacted in case you default. So, yes, the limit will allow you to take on more money. But if you pay it on time, whether it's a lesser credit card limit or a higher, will not really impact your CIBIL score. But yes, taking money and paying it back will improve your credit score.
You're watching NSE FinWiz powered by CNBC TV 18 Season 3. It's time for a short break. Don't go anywhere. We'll be right back. Welcome back. You're watching NSE FinWiz powered by CNBC TV 18 Season 3. Today we're at the Gurgaon office of PolicyBazaar.com. Ankur, when we talk about investing in equities and investing in debt, and you spoke earlier about diversification, what is the role of mutual funds in a person's investment basket? Because there's a lot of confusion about mutual funds. People think it's an asset class by itself, but a mutual fund can be used to invest in equities, in debt. So what is the benefit of investing in mutual funds?
Well, you can invest into debt or equity directly also, or else you can give that money to an expert who knows how to make that investment. Obviously, whosoever is managing your money will have a charge, but they have a better knowledge in terms of investing that money. For example, when you are investing into equity, you can buy a particular stock, right? Or you can invest into an equity fund which is investing into top 30, 40 companies. And the fund manager has done the research which investment to make, which stock to buy, which not to buy and all. So usually, the investor would not have that much knowledge in terms of understanding the business, understanding the finance part of it and doing the valuation. So that is why investing through a fund manager in the form of a mutual fund makes a lot of sense, because you get a diversified portfolio of stocks. Your risk is mitigated and yet you get an exposure on equity. And definitely a lot of people think that mutual fund on its own is a product. Yes, it is a product, but it gives you exposure on various asset classes. So whether it's debt, equity or gold, you get that exposure, and within that also you can frame portfolio. Within debt also you can have multiple portfolios. Within equity also you can have multiple portfolios.
What should be the percentage to invest in mutual fund? Like how much percentage should be in large cap fund? How much percentage should be medium and the small, I believe?
So as you would be aware that large cap is the least risky category within equity, because these are big companies, where the money is being invested, followed by mid cap and small cap. Small cap is the riskiest. So if you're just starting out as a first time investor, allocate more towards the large cap. Say around 75% you can allocate on the large cap and 25% on the mid cap. As you gain more experience, investing experience, you can allocate more on the mid cap as well and make a split of 60-40 later on.
How safe is mutual investment, and what risk I'm looking into? 50-50, 40-60?
The last 10-year average inflation has been 8%. And if you look at historically, the inflation has been around that level. I'm not counting the lifestyle inflation that we get into. Okay. So what will happen? Your money that you're investing in fixed deposit is earning lower return than the inflation that you have. Now that is a much bigger risk than what you will get in while investing. Now asking you a question now, when you invest in an equity market for a period of 10 years, your capital has always been protected. The problem arises when we try to become rich overnight. We try to trade the market, we try to outbeat the market by predicting the market and trying to churn around. That is real fatal. Okay? So if you have a discipline investing over long-term period, believe me, you will create significant wealth. Okay. Now today, as when I started saying that investment is no longer a choice, it's a necessity, I meant that, because to beat inflation, we invest to beat inflation. Okay. And for that, investing in any mutual fund is the best way of participating in the market through equity or debt, whichever way it is.
We have different kind of insurances, and if I have to allocate my fund while investing, so what do I prioritize? Do I prioritize my retirement plan or a child plan or a life insurance for myself or a health insurance for that matter? I do understand that being a corporate, I am covered by my company. However, should I take a family cover plan? I mean, this is where I get confused in terms of insurance.
Firstly, there are various goals. In order to cover that, you should definitely have a term plan. God forbid if something happens to you, your money, the beneficiary would get the money. Your family will not get into any financial problem. And from a medical insurance point of view, it's good to have a medical insurance because these days, people change jobs, right? So the kind of benefits you are getting in one company, those benefits may change when you shift to a different company. And maintaining one Mediclaim policy at your end is a good thing to do. And coming to prioritizing your goals, the first goal you should think of, not linking it with the insurance, but from a goal perspective, is your retirement. That is the first priority. It comes even before child's future planning actually. So the first thing is retirement, followed by the way you prioritize your goals. Whether you prioritize vacation over buying a car, that's your personal choice.
This is NSE FinWiz powered by CNBC TV 18 Season 3. Time for a short break. We'll be right back. Welcome back. You're watching NSE FinWiz powered by CNBC TV 18 Season 3. Tanvir, I want to talk to you about gold, which is currently, again, there was a period where it gave great returns, then there was it kind of stagnated. Now again, there is movement in the gold market and people are interested and wondering whether we should have exposure to gold. What's a good way for people to invest in gold, to get exposure to gold?
Okay. In fact, this year the government has come with many schemes with regard to gold. Okay. Now, gold typically is what we call is a natural hedge against inflation. Okay. And gold will typically do well if the global market is going through a turmoil. If you look at gold, went very rapidly up when the US crisis happened. And when it started to stabilize, gold price came again off. So the best gold in today's time is the gold bond fund that the government started. What it tracks, it gives you the value of gold, appreciation of the gold when it happens at time, plus it pays you 2.75% additionally. If you have missed that, there is something called gold monetization scheme. If you have bought gold, now buy gold bars, you can go to the bank and they will pay you additionally 2.25% over that gold bar. Okay? And whenever you wish to withdraw it back, they will give you the gold bar back. Okay? That is the best way to invest in today's time. And the other way of doing is participating through ETF, exchange traded fund. There are three best ways of participating to gold.
Do we have any instrument available to invest in currency markets or commodities? If no, why not? If yes, what are these options available and what are the things I need to keep in mind before purchasing that?
When you talk about commodities and currencies, these are typical asset classes where you would play a lot of demand and supply play would be there, rather than anything beyond understanding a lot to it. Obviously, there are traders who would trade, and the kind of risk appetite you need to have is a very, very high. From a product point of view, yes, there are derivatives into both commodities and currency. You can do that, but it's a very, very risky venture, to get into.
What do you suggest about national saving program schemes? Are they good option for investments like things like Kisan Vikas Patra and kids education things like Kanya Samriddhi account?
Those particular investment that you're talking about is for people who are not at all risk taking ability, it's very low, and you're completely risk averse, then you can invest in those kind of products. It's still better than not investing. Okay, that if you invest in PPF each year 1 lakh rupees for the last 15 years, you would invested 15 lakh rupees, and that 15 lakh rupees after a period of 15 years would have become 34 lakh rupees. Same money, if you invested in a tax saving equity linked saving scheme, ELSS popularly known as, same 15 lakh invested over a period of 15 years would have become almost a crore. That huge a difference. Okay, and that's what power of compounding does. Now, the worst performing ELS scheme would have become 50 lakh rupees for you, which is 50% higher than your PPF scheme. Why is PPF scheme good? It gives you, it's called triple E exemption. When you invest, there's a tax benefit, the interest is tax free, and maturity is tax free. ELSS offers the same 3 benefits. So if you're investing over a long term period, significant wealth will get created if you invest in growth asset. National saving scheme, Sukrati Savi are not growth assets.
Well, that's all the time that we have. Thank you so much, Tanvi. Thank you so much, Ankur. Thank you for having us here.
The show was very good, very informative. I actually like the simplicity with which they explained the various concepts. Personally, the gold monetization and the ETF schemes that they spoke about was really helpful.
I think it was a great show. I think all of us, one discovery which I made is all of us are in different stages of personal financial journey. I've been investing for 15 years, but definitely did benefit from this show because there's always something which you've not thought of. In your daily life, you're busy and there's something which is new coming up and you're not able to track, and it was quite useful for even me who've has some knowledge of personal financial.
This is one of the most informative show that I've been to, though I hail from HR, but still the finances and everything, how to manage finances is something that I always lack on. And this is something which gives me a very clear idea where to invest, what to invest, why to invest. That's important. So that makes me more comfortable now getting into maybe ULIP or maybe a long-term plan or maybe a short-term plan for that matter of fact.
Well, that's all on this episode of NSE FinWiz, powered by CNBC TV 18 Season 3. But before we go, here's a chance for you to win a cool goodie bag by answering this viewer question. A mutual fund investor is exempt from paying any tax on the dividend he receives from mutual funds. A. True. B. False. Send in your answers at fwq@network18online.com. The correct answer to last week's viewer question is option C, fund size. Many thanks to all the viewers who sent in their replies. The winner to episode 15's viewer question is Jignesh Ashar. We'll see you next week with another set of young employees at another company. Until then, from the entire team, many thanks for watching.